when they happen, you should accept it or kind of work with them and see what you can do. There is a book coming out called Resistance Money by Andrew Bailey and others. It's a multi-author book, and that is three philosophy professors, so academic people exploring Bitcoin positively. So there are, and that has an academic press associated with it. It's not a retail book. It's an academic press. And so I think that the larger it gets, the more of these kind of voices you have in the space, it is actually at least part of the conversation, even if it's not necessarily the majority view, which is fine.
What was the general sentiment among, like, the students and the professors that you were interacting with? Did they have a good grasp on, like, what makes Bitcoin Bitcoin or what separates Bitcoin from crypto, or were they just generally curious about everything?
Curious about everything. And I think for a lot of people, we're still kind of in the blockchain, not Bitcoin, phase of discovery, which is a popular. I use that line because that was a popular sentiment a while ago. It's not quite that now, but basically, um, there's the idea that programmability is a good thing, with not necessarily understanding of the trade-offs, right? So, kind of if you approach the space and you're here for a handful of hours, your first thought is, okay, Bitcoin's old tech. These others just sequestered away to just like a savings asset and not really like an actual monetary asset. And so I kind of view that technological determinism as a bigger factor than most people seem to realize. Um, and so I think that specific view of combining history and technology and kind of looking at through that lens is something that I approach a lot more thoroughly or put a lot more emphasis on than other books.
I like it. I do wanna talk about the ETFs since the ETFs have been such a hot conversation recently, obviously. What have you seen from your perspective regarding the initial inflow trends and, how did the first month of these ETFs trading, how did it go from your perspective?
So I think the first month or so was, about as expected, which is that you had a lot of rotation out of GPTC, a lot of trapped money, got out of the higher fee, product and got into these lower fee, more reputable products. Um, and it's challenging because if you're in a taxable account, there's actually kind of, maybe reasons not to do that right away. And whereas if you're in a retirement account or other sort of tax advantage account, there's more reasons to do that on day one. And so you saw basically this rotation of a lot of pent up demand to get out of one product into other products. So that was normal. And that kind of, you had net inflows, but not overwhelming the first month. I think that's what's been more interesting and perhaps mildly returns. One of the surprising things, or kind of a consensus breaker, would be if you get a cycle that is higher than a prior cycle. That's never really happened before. And I'm still agnostic if that's going to happen this time or not. But one of the if it does happen, one of the factors that I think would be relevant for making it happen is the ETFs. If there's something that helps us surprise the upside, I think last cycle surprised most people to the downside. Like the high was not quite as high as some people were hoping. The low was lower than people were hoping, even though it was a much higher high and a much higher low than the cycle before it. But if you were to kind of surprise to the upside in a cycle, I think ETFs are one of the major variables that would probably enable that.
Yeah, on that topic of the kind of muted high during the last bull market, I know some people have suggested that FTX and other entities maybe selling paper Bitcoin played a role in not having that typical blow off top that we might see. Do you agree with that or do you disagree with that?
I think that's part of it. Yeah, there was is I mean, it's well known now that there was some rehypothecation. And that's a threat to any financial asset. Um, and so that's, we like FTX was something like 1.8 billion, naked short Bitcoin, um, dollars worth. And there were other entities in a similar boat. So I do think that was a muting factor. I think a potentially other muting factor was that across the whole have a kind of an influence on that sort of thing. There's an economic push that happens. So it's not that the threat is 0, but instead I would say basically there already were several 100,000 coins in these centralized entities. Even, when you take in other things like Coinbase, there's more than that, but there's still the minority. So it's a large minority of coins that are in these kind of big centralized honeypots, and that this might slightly increase them, but not enough. Like if you weren't worried about 15% of coins being held in big institutions, 20% is not going to be the game changer, most likely, right? Or 600,000 coins in ETF specifically going up to a million or billion point two, right? That's not what changes things. So overall, I think that risk is somewhat overblown. Even though I am glad that people are talking about it. And the point that I've made is, I think the ETFs, it's understandable that they're getting disproportionate coverage right now because they're one of the major new catalysts for demand and therefore price. In terms of importance, I think it's really important to make technologies or enable kind of communities around the world to use Bitcoin. So I've made the point that, for example, these little Bitcoin hubs around the world are really important, right? So Bitcoin Beach was an early example, but now you have Bitcoin Jungle, Bitcoin Akasi. You have conferences popping up in India and Africa and South Korea, and you have all these different hubs around the world, these different communities, and some of them for punk like Frontier. That's the part that is still, you know, that developers are still working on, that users are still exploring, that people are pushing back on laws for. And I think that's the area where there's gonna be some battles ahead.
I agree with that. What are your general thoughts on the concept of collaborative custody, both for individuals or high net worth individuals and enterprises as well, in comparison, I guess, to the ETF?
Well, so I think collaborative custody, specifically multi-sig more generally, it's one of the features that only assets like this can do that prior assets couldn't do. You can't multi-sig gold. You can't multi-sig equities. You can't multi-sig real estate. So the fact that it's like Harry Potter, it's like Voldemort with his Horcruxes, right? He's like split. You had to go around and go on an adventure to like destroy all seven of his Horcruxes. I think that's the number before you could kill Voldemort. And Bitcoin, because with multisig, you have that capability that only fictional supervillains had in the past, which is that you can split your ownership in multiple locations and make it so that even a major government or a major uh, Ocean's 11 team of hackers would have trouble getting your coins because you have this capability to split things out. And of course, depending, some of them will probably accumulate Bitcoin, but I'm not really seeing the major demand source for that in the next cycle. I think that funds are a much bigger deal because it's far more likely that, a $100 billion pool of capital decides, yeah, maybe 1% Bitcoin makes sense, more so than a corporation deciding, let's put 5% of our balance sheet in Bitcoin because it's not that much kind of balance sheet capacity in corporations to begin with. And the decisions for it are way more complex compared to much larger balance sheets in the investing world. And it's normal for them to put a small percentage into something. So I think that that's kind of the lower hanging fruit overall.
Yeah, I mean, when MicroStrategy first adopted Bitcoin, it felt like there was going to be a wave of corporations adopting Bitcoin, and obviously that just did not happen whatsoever. I guess to some extent, it kind of shows how rare Michael Saylor is and the unique situation that MicroStrategy was in with him at the leading the company.
Yeah, I agree. I mean, you saw it from Square, we saw it from MicroStrategy, we saw it from Tesla, although he kind of flip-flopped on it. Um, and so obviously it was smaller businesses, but a lot of it's in the smaller business, the smaller private businesses. And so I think that investment managers are a way